Good morning and welcome to the Killik market update. There's been a lot of talk about negative bond yields over the last few weeks, and in fact 25% of global bonds now have negative yields. And that simply means that if you buy them at today's price and hold them until maturity, you would end up making a loss. Now, how does a bond come to have a negative yield? Well, let's imagine there's a bond that matures in 1 year's time, and within that year the bond will pay income of 2p. After the year, the holder will receive back the original capital sum of 100p. If I'm willing to pay 103p for that bond up front, I would make a loss if I bought it today and hold it until maturity. And that's what we're now seeing with billions of dollars worth of bonds all over the world. Now, how have so many bonds come to have negative yields? Well, central banks all around the world, via their monetary policy programs and via quantitative easing, have been buying huge amounts of bonds, pushing up the prices and lowering yields. And the hope was originally that in doing this, and by lowering these yields, investors would be forced or encouraged to put money elsewhere, for example into the stock market, or perhaps even spending money, and that would boost inflation and boost economic growth. However, investors have simply carried on buying bonds, as you can see by the vast amount of negative yields we've now got around the world. I've got some examples here for you. So these are examples of 10-year government bond yields for different countries around the world. So Germany, minus 0.56%. So if you were to lend the German government money for 10 years, you would get an annual return of minus 0.56%. France, minus 0.29%, Japan, minus 0.19%, Greece, just over 2%. If you bear in mind that a lot of people thought Greece would go bust about 5 years ago, the fact that you can now lend the Greek government money for 10 years and only get a return of 2% really shows you how widespread this issue of low bond yields is. So a lot of economists are saying because of this that perhaps the amount that we can do with monetary policy has now run its course. If economic growth cannot be encouraged by central banks having such low interest rates, then surely we need an alternative. So over the last few weeks, a number of major economists have been talking about the need for more fiscal policy. For example, governments increasing their spending via things like infrastructure projects, and that is another way of boosting economic growth. So a number of major economists at the moment do expect to see quite a rise in fiscal expenditure over the coming years. And also this week, we've been looking at gross domestic product per capita in China. Now, this is essentially just the total economic output that China makes in a year divided by the total population. And really, it's a measure of the standard of living within a country. So to put it into context, the current GDP per capita in the UK is around about $40,000 per person. In China, the level has been increasing quite steadily over the past few years, and it's now approaching $10,000. And this is supposed to be quite a significant level, because after the $10,000 point, it's thought that people have enough money to cover the real basics like food and shelter. And after that point, you do tend to see a rise in demand for things like financial products and insurance. So we're keeping an eye on this metric quite closely. And we have recently published a note on Chinese insurance. So if you would like to read that, please do give your investment manager a call. And finally this week, the Royal Mint has announced that for the first time since 1972, it will not be producing any new copper coins this year. The reason for that is that it already believes we have enough in circulation. And this for us is really just another data point that shows that we are moving towards becoming a cashless society. Demand for physical cash is falling, and that just shows the huge opportunity that we still have for digital payments. So please do give us a call if you would like to talk through our thoughts on digital payments and online payments in more detail. Now, moving on to the week ahead, it's a fairly important week for some of the big Chinese companies. So we have got results coming out from Tencent, from Alibaba, and from Ping An. That's it from us. Have a great weekend, and we'll see you next Friday.